This is Alan Bush with Archer Financial Services. We're going to start out with stock index futures as usual. Seeing some pressure developing this morning. Once again, the dominant influence is the situation in the Eurozone. Of course, we do have the two-day European Union summit today and tomorrow. Expectations are very low for this meeting. It seems like there has never been a time where representatives from the European Union have been this divisive in advance of a meeting, so there is not much likely to come on the positive side from this meeting. Knowing that, though, I think has some positives to it. And if there is any surprise, this could support stock index futures if there is any positive outcome whatsoever. We did have some economic reports today. Jobless claims coming in about as expected. The GDP coming in as expected, up 1.9%. Still feeling that, though, while the European Union situation, especially this summit today and tomorrow, is in focus in the near term, the dominant influence is likely to be prospects of easier credit from the Fed, and it seems more and more likely that the Fed at some point down the road will come in with some more accommodation, possibly in the form of QE3. So the dominant influence in stock index futures is bullish, and I think in the longer term we will see prices working higher. Over in the currencies, as we mentioned, problems there in the Eurozone. The yield on Spanish and Italian debt increasing now quite a bit in the last couple of days, that a negative. We did have German unemployment increasing in the latest reporting period. Any surprise as far as the European Union meeting that is supportive to the zone, I think should be viewed as a selling opportunity since so many people are short this market. If there are any breakouts to the upside in the euro currency, in fact, even if there are breakouts to the upside in the Australian dollar or the Canadian, these, I believe, are selling opportunities. Still believing that the long-term trend for these three currencies is lower. Over in the credit markets, seeing futures higher. Problems in the Eurozone, of course, a flight to quality influence helping the treasuries today. Not to mention prospects of easier credit from the Fed, an ongoing bullish influence. So with futures trading better this morning, I would expect that to continue today. And I would also expect the main trend for the credit markets, which is higher, to continue well into the balance of this year. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.